Welcome back to this special chat with Mr. Deepak Parekh. He has told us his extraordinary faith that affordable housing is going to be the engine that kickstarts growth. But Mr. Parekh, that really is my question. Are you getting a sense that the economy is turning? I mean, we see here and there some, good numbers being announced by some companies, say a paint company here or an air-conditioned company there. But largely earnings growth has not picked up and capex has just not picked up. Are you smelling a turnaround?
I'm certainly smelling a turnaround. Maybe the turnaround will start slowly, but I'm confident. My view is the worst is over. You will see capital spend. Boardrooms are discussing what to do. There will be more capital spend. There will be more investment in different sectors. Some sectors may not be where the surplus, but there is definitely. And infrastructure has taken such a big leap, which creates your jobs and requirement of funds. Take for instance in Mumbai the 3-4 large projects that we are doing, the metro connection, the underground from Colaba to Santa Cruz. That's a massive project. Now contracts have been given for that. You need labor, you need technicians, you need engineers, all that is happening. So infrastructure spend across the country, whether it's a metro here or a metro there or underground or sea link, large number of road projects have been given. And the recent success of this IRB issue also, InvIT is enormous.
You think InvIT can be an engine which will allow infrastructure companies, construction companies to get funds?
No, I'm sure they could. They've raised this money. It was very heavily oversubscribed. And they will have a second round of InvIT when more roads become eligible because you have a 2-year track record. And the negative of that is when they raise money, they're paying the banks off. So the bank's credit goes down, and these are good assets. So banks are being paid back from the money raised.
Actually, that was going to be my next question. The one reason why people are not being hopeful about the economic recovery is that this big financial sector is saddled with whatever 7 lakh, 8 lakh crore of bad loans. I mean, you've seen this, in a micro case like a Satyam or a UTI, you've been instrumental in the turnaround, and you have seen the macro cycles as well. I mean, how does one solve this big elephant?
Well, we are solving step by step. Various steps have been taken. Various efforts have been made. Disclosures have come out openly. So there's nothing hidden, nothing much likely to be hidden under the carpet now. Everything is above. Now action needs to be taken. The recent ordinance by the government was necessary because government is the owner of public sector banks, not the Reserve Bank. The ordinance has now directed and enabled Reserve Bank of India to initiate bankruptcy proceedings under the new act, to initiate recovery from these people, to form an oversight so the protection of the employees, senior management is there, who will, outside agency who will support their decision to take a haircut or to take a CD, to sell loans to an asset reconstruction. So I think we are getting there, but it's a slow process, it's a difficult process. Who is going to bell the cat? How much haircut can banks take, and what happens to the promoters after the haircut?
No, that is the whole problem, Mr. Parekh. I don't think the government wants to, sign off on a haircut because they would be pardoning big business of paying back. The RBI will certainly not want to do that. The bankers don't want to sign on and say, yes, this man with 40,000 crore need pay back only 30,000 crore. Who will have the spine to say that? That problem keeps coming back.
Well, the Joint Lenders Forum, with the support of the board, with the support of the Oversight Committee, will have to take these hard decisions. An easy way out would be to take the equity of the company. Take the equity of the company because the promoters cannot flourish after banks write off massive sums of money. The the pain has to be shared more by the promoter than by the banker. The banker is willing to share some pain, but you cannot continue flourishing and starting new companies if a banks or consortium of banks have written off large sums of money. So in many cases which are under discussion at the moment, the bankers are insisting on equity to be given also, and some preference shares or some zero coupon also to make it that payment may come at a later date. Now equity is a good solution, because if the company does well, if the basic product is good, if the company is good, if the turnaround happens, say in steel, the equity which the banks take will make money. So to some extent it will offset what they have written off. They may have to provide now, but it can come back later. And so taking equity from promoters is absolutely a must.
Now, equity from promoters in that company itself is actually leading to problem for the banks, because then they have not paid sales tax, they have not paid probably employees, they're all coming and asking the banker to pay. What about the equity they hold in other group companies?
So there are, in many cases, the bankers were smart enough to have cross-default clauses. Okay. So where cross-default clauses are there, you take equity of a profitable, of a running company or a viable company.
But only where
because
they
have cross-default. But they can pressurize them. They can be pressurized. But see the problem we have, and India cannot be a stronger economy with weaker banks.
Exactly.
Banking sector has to be strong for the economy to grow faster. So I think this fact is known to everyone, and therefore everyone in the financial system, whether it's a regulator, the finance ministry, the government, RBI, are all working towards resolution of NPAs in a case-by-case basis, in a structured manner. So I know there have been many frauds. Now these frauds, they are every day, and we hear in your channel on newspaper that some diamond person has got this much, or some pearl company somewhere I read has got so much. We don't know how they will, because if a collusion has happened, if a fraud has happened, if the person has swindled, and there are no assets really, those are the cases where taking equity is not going to help, where we'll have to recognize. And again, the Reserve Bank has asked the banks to sell their non-core assets.
Yes.
And sell some equity in their mutual fund, insurance companies, book your profits and make a provision.
Now, I'll tell you, Rosneft has no haircut. There are only 2 or 3 foreign banks and Indian private sector banks. Even then we have not, after backing by the highest parties, prime ministers of 2 countries, we have still 7 months into signing it and not resolved.
I'm not sure what is holding it up.
No,
I'm not sure what is the reason of a hold up.
Therefore, where haircuts are involved, are you confident?
No, apparently I'm told that 1 or 2 institutions have not agreed. Yes. So they are government institutions. They should be forced to comply with.
Do you think, therefore, that we will see some resolution at least before FY18 is out?
I'm sure you will see some resolution. Some action will happen. I'm quite hopeful. At least the problem is out in the surface.
That's true.
Problem is open. Action is needed. Maybe we need capital. And you see some of the banks have raised perpetual bonds. Now, perpetual bonds for an investor is very attractive. 10-11% perpetual bonds, they can increase their tier 2 capital. They can perpetually, even tier 1. Yes. They can increase their capital base to use that money to provide. So I think there are various things happening. It's not just one. The problem is being attacked and tackled from all angles. And I see some headway, some solutions, some better times in
Mr. Parekh, thank you very much. I hope your enthusiasm and your optimism in the markets and in the economy pays off. We are looking forward. At the end of the year, let's check whether the economy really is able to run on especially this engine of affordable housing. Thank you very much, sir.